Hi, my name is Mijano Raman, and this is my sixth video on financial planning tacit knowledge series. Please feel free to read my book, Financial Freedom, a fictional financial plan. Obviously, by now, this is my sixth meeting. You have some sort of idea about financial planning, what is financial planning is all about. What I want to talk about is that the one of the things that I left to talk about is that the debt planning or mortgage planning, something that can be taken into consideration before the second meeting, but I prefer to do it on the second or third meeting. If so, the reason is because this is something that requires one particular aspect of financial planning that requires special attention, and you might need some sort of help from their mortgage, from the lenders, or so forth. So this is something that you want to talk about it before you prepare your strategies. So how that will help you is that this will help you to redesign the cash flow, how to reduce their cash, how to increase their cash flow over a lifetime or over 5 years period of time. So this is something that you need to look into. It's something that provides you cash flow. Cash flow is something that allows you to control your financial planning. Not only that, cash flow is something that gives you a special strength in your financial planning. Think about this way: there are often you will see from my business experience, I've noticed that the people has businesses and they spend a whole lot of money into doing something that probably will generate less cash. Let's think about a business that is basically purchase-based business, or inventory-based business. So often you see is that they actually spend a lot of money into decorating the place. Go beyond their means, and this is also known as fixed cost, or something that is spent to increase someone else's value of the property. So this doesn't really benefit the client. In this case, if they own some sort of retail venture, so this doesn't help. So this is something. Remember, cash flow without cash flow, business is dead. Business is something that can't go on anymore. Same thing goes for personal life, is that without the cash flow, a person can only sustain their life such a long time. So this is something that you need to look into it. Cash flow allows you to increase everything versus wealth, whether it's luxury, whatever you name it. Cash flow is something that gives the freedom in financial life. Right? So this is something you need to consider before you get to your designing or a strategy process. So you have your first meeting as the data collection. Second meeting is that the recapture of the data. Third meeting is that somewhere between second and third meeting, you do some debt analysis before you go through your designing the plan. So let's say, for example, if a client is actually significantly paying off their mortgage fast, he's actually creating a problem in his cash flow life. So actually living out all those TFSA, all those RRSP, he's living out all those and focusing paying out his mortgage, right? Because the mortgage actually is not costing so much. And then again, when you design your financial plan, see what can you do within the mortgage planning itself. Does he have enough liquidity in his does it have enough equity in his mortgage or in his house? If so, can it be used for the planning purpose? So this is something you're going to take a look at it when it comes to designing. Does the mortgage, what kind of life insurance does he have? Does he have a life insurance? Does he have a mortgage insurance? If so, is anywhere in his portfolio whether he's paying insurance, extra insurance costs? Do some sort of insurance analysis that will allow you to understand what kind of planning will take place, what kind of a strategy that you could come up with. This is something that you need to look into it. Obviously, you will not learn a whole bunch of things from watching this video series, but what will provide you with some sort of knowledge, tacit knowledge, some sort of new way of doing things rather than the old way. So what I used to do is that I used to conduct all those meetings. On the third meetings, after I finished my pro forma financial plan, after the discussion, I would actually go through various designing options. So I would have, so let's say whether paying off mortgage faster, or what the future look like, paying off mortgage on a regular basis, and enhancing their tax efficient investments. How would their future look like? Okay, if they don't do any of those, what the future would look like? These three plans that you put together, and then also have to look at it. Is that these, I'm talking about average beings. So these are something that you got to take a look at it. Whether anywhere in their life, whether they're paying anywhere something that doesn't require. So let's say if they're paying a mortgage insurance, well, they have life insurance. What's the point of having that mortgage insurance? It only covers the lenders. So you'd have to take a look at it. Is that isn't it a good option to buying them a better life insurance? This is something that you need to look into it. Are there anywhere they have a problem? Do they have a problem with their will? Do they have a problem with their power of attorney? You would be able to provide recommendations on that, but be sure that have them contact their lawyer if you find something that doesn't add up, or have something, give them some sort of documents to read, so that will allow them to understand. So on the third meeting, now, what is it you do? I'm not going to talk about the second meeting. It's basically a recapture of the first meeting. So what is it you do on the third meeting? So you get back to your office and you start doing all those planning, all those strategies. And one of the major aspects that you do have to look into it is that how do you design the plan? And designing a plan requires skills. What are the skills that you require? You require accounting skills. As it's often a good idea to have a accounting diploma. Then either you could have your, as a client, take a look at it, whether your plan on whether they have some sort of accounting education, whether they have investment knowledge, whether they have a certification from the either the Canadian investment funds or some sort of a security certification. Do they have insurance license? Like what kind of insurance license they have? Do they have? Do they have a CFP or their FP1? What they have? Are they actually what they're doing? These are the things that you need to take a look at it. So let's say this is something that you would have to, as a client, you'd have to look into, assess your financial advisor. Is that what they're doing? Are they actually continuously learning? Are they, it is an industry requirement that you actually have 15 credit professional CE credits every year. But those will allow you to learn more about the industry. But often it's a good idea to be involved in an educational institution, learn continuous basis. So let's say, for example, a financial planner could often go for some sort of trust education, learning about trust, some sort of legal education, have a certificate or diploma on paralegal, or some sort of Juris Doctor, or something like that. Something that allows your planner to continuously be involved within the industry, within the educational industry, because knowledge is something that requires to what they're really selling as a financial planner, as an investment advisor. What they're selling is advice, knowledge, and be sure that they have that knowledge. Now, not only that, educational knowledge or knowledge from institution is only a basic that provides them with basic. What provides them with with comprehensive knowledge is that their ongoing learning, their willingness to adapt within the industry itself, their mindset, their ongoing development of their skills, so let's say, for example, what kind of experience they have before getting to financialist, what kind of work experience they have they ever in their lifetime conducted a business before they take in a business client, what sort of business experience they have, because let's think of this way, there are some experience that cannot be obtained without having the experience. So let's say if you are a business owner, if I'm conducting a plan for a business owners and I have no experience on the business, that is difficult to understand his ability, his mind, how he thinks, right? It is, like I said, business owners are different, and they take risk every steps of their life. And you have to be able to understand how they think to serve them. Now, in average client category, a business owners who starts from, who could be a new entrepreneurs, who could be new, who has a new venture, something that, they could also fall into this category, a new professional. But beware, those are actually, when you plan for them, beware or keep something back in your mind that these are the clients who actually grow over a lifetime, and at some point they will become a high net worth client. And every client is special, right? But when you do planning, pay special attention to that particular plan, how that will, your plan, how that will affect their ongoing lifestyle. So this is something that you gotta look into. So let's for example, give you an example. If you're conducting a plan for a self-employed doctor or dentist or engineer or architecture or even a social worker or any sorts of, any type of professional or a lawyer, whoever you're conducting your financial plan for, beware that they, after the 5-year or 6th year, they will earn a significant amount of money. The reason is because they become experienced within the field itself, right? So this is something that you need to look into it. You need to be aware of. These are the basic aspects. So again, designing a plan is a whole new breed of experience. It is something cannot be taught. It can be learned. So you could learn from your mentors, you could learn from your peers, you could learn from your colleagues, you could learn from your clients, you could learn from your other professionals within the industry, from other industry. It could be an actuary, it could be a lawyer, it could be an accountant, could be a financial planner, could be an investment advisor, it could be anything. Ongoing learning will allow you to adapt within the industry itself. So I won't get into too much discussion in this video, rather talk about basic, which is the obviously each case. Remember I said each case, each individual is different. Therefore, their planning scope, their planning mechanisms are different. Not all shoe fits. Not all, you cannot buy, same t-shirts, medium t-shirts for everybody. You cannot buy medium shoes for everybody. So each plans are different, unique. So talking about these strategies will not help unless it's a specific case. So one day I will talk about a case. I will pick up a case and I'll talk about it, what can be done. Now, can the same concept be applied to a different client? Maybe, maybe not. Maybe within the same industry. If it is a doctor, perhaps yes. Then again, no, because their lifestyle is different. Their goals are different. Their objectives are different. They have different family issues. So each client, remember I said each client is different. Knowledge cannot be taught. It can only be earned. You could learn. No one can teach you. So you could learn, like I said, you could learn every day from everyone, whether it's a client, whether it's a prospect. So let's say, for example, let's say you meet a new client and he's something that you never worked with. Something is, let's say a scuba diver, or let's say someone who is a flight, a captain in a ship, or a captain, or some sort of flight attendant, or some sort of, they have high risk within their career. Could be a military personnel, could be someone else, right? Who has could be a police officer, could be someone who continuously deal with risky issues. So they have a different obligation, different lifestyles. So you need to be able to be aware of that lifestyles before you conduct a plan. So, like I said, designing a plan requires knowledge, and you are going to need that knowledge from both from educational aspects and practical aspects. So this concludes my 6th video on financial planning tacit knowledge series. please feel free to read my book, Financial Freedom, A Fictional Financial Plan. Thank you very much.